Okay, today is Sunday, August 18th. I'm going to look at my DIA Dow 30 ETF trade where I have a vertical spread, bearish vertical debit spread on the table. Let's take a look at the chart. Currently, the DIA closed at 150.36 on Friday. The DIA being the Dow 30 ETF. And it looks to me as if we're trying to complete a cycle. Notice that for those of you who've taken my courses before, stocks like to go through a lot of times and complete these, whether it's a rounded top or a rounded bottom, it's a cycle. And so there could be a little bounce up here for sure. We do have the Fed announcement for the, it's not a Fed announcement, but the minutes from the last Fed meeting are going to come out on Wednesday. So that means there could be some time decay as the markets tend to go sideways before Fed announcements and other major news announcements like non-farm payroll. Because all eyes are on the Fed, it's possible that we'll probably have a sideways market through Wednesday afternoon. So my first target for the DIA is to come down and touch this trend line support of 149, and that's a much longer trend line. You can see my charts get a little bit messy as I bring in more time, but let me go back to the 60-minute chart. So trust me when I tell you that this is a good support level here at 149. Then we also have a support level at 145 to the downside. On the upside, we do have a gap to fill at 153.50. So we have upper resistance at 152. If the markets really want to bounce and go back up, we could see this gap filled at 153.50. So let's take a look at this option trade. My first target is 149 and then 145, and the markets have been moving a little bit faster lately. So based on option views analysis, August 20th, which would be Monday, if we were to move quickly down to 149, this trade is cost me $300. Not a very expensive trade. I would potentially pull in $230 if we drop to 149 on Monday. 145, if we were to drop all the way down there, we would pull in about $600. And that's actually the trade maxes out right about that point. Now, what happens if we want to go back up and go back up to resistance? And resistance, we've said, is about 152. So at 152, we would be basically almost at a complete loss. We'd be down about $270 out of the 300. So could we go ahead and look at some other trade possibilities? Now this trade is only good for a week. We've only got 8 days on it. So if we're going to go up, we could start to look for, there's a 43 delta on the 151 call, and it's trading at 74 cents. Time decay is going to be big. Our theta on that is $6.16. So we're losing 61 cents per share, $6 per contract when we buy them, or we could be selling them. If we know that we have upper resistance with a gap to fill at 153.50, do we have any money that we can make by selling a higher call? Well, not really. Not on the weeklies. It's 16 cents on the 153 call. Not really worth doing anything except maybe buying them if it looks like the market's running up quickly. Right here, if we were to go ahead and put on a trade, and if I was to buy the 151 calls for 74 cents, let's say I bought 4 of those, and I only want to look at the trade, not my existing position. If we were to get back up to that 152 range and even 153.50, if it was to happen on Monday, we'd be spending another $300 to bring in about 240. It's not too bad. If we were to go all the way up to 153 and change, again, we'd make about $650 with a $300 excursion. So the risk reward on this looks relatively good. And so I have a plan as to how I'm going to handle this trade if the DIA is going to go down. I already have that trade in place. And so I'm expecting potentially a 149 move, or even lower, down to 146, 145. Or if we do move up, I'm prepared to buy the 151 calls, which are 45 delta for 74 cents based on Friday's close at 150.48. And so that's the trade. All right, August 18th, 2013, Jerry First for Investors Education Network, trade log.